Intel kicking off earnings season on a high note, reporting top and bottom that outpaced expectations. Michelle has that story. We're talking about it all morning long and giving the techs quite a bit of juice. Michelle.
Absolutely, Bernie. Now, Intel is the world's biggest chip maker, so it's good news all round that its sales beat estimates. Good news for the economy at large and, of course, for the tech sector. Intel earned 33 cents a share in the third quarter. Analysts had estimated 27 cents. Now, gross margin was 58% in the third quarter. Those cost-cutting benefits paying off. And today's numbers all the more impressive because Intel had actually raised its outlook 2 months ago.
What we saw was that actual sell-through during Q3 looked pretty good. China was strong. We saw the back-to-school season in the U.S. Also being healthy. And then we saw the worldwide supply chain putting in place the inventory to satisfy a seasonally up Q4. So kind of what you'd expect in the third quarter of any year.
And Intel also forecasting fourth quarter sales of about $10.1 billion, and it put its fourth quarter gross margin at 62%. Now, Intel is up almost 40% year to date and reaching its 52-week high today, closing at $20.69. And Intel's results indicate that computer demand is returning to pre-recession levels. Stock in arch rival Advanced Micro Devices rising in after-hours trading, up about 5.3% right now. And Bernie, analysts say that the September chip sales likely rose on anticipated holiday demand, as well as chip orders ahead of the upcoming release of the Windows 7 operating system.
I'm giving that a whirl myself right now. The jury's still out. We'll see if it's got to be better than Vista, but it's got to be better than XP too. Thanks, Michelle. Back to our guest, Dr. Faber. Do you take any solace from the Intel numbers? I mean, it shows that companies making real things that people still have demand for are going to continue to be in business.
I mean, first of all, we have to see in a recession like we have, the strong companies actually gain market share at the expense of weaker companies because they still have money to invest and to carry out research and development. Actually, last year, in December of last year, I was invited by Intel to a seminar in San Francisco, and then the stock at that time was $12. I told all the senior managers they should buy Intel shares because it would way outperform U.S. government bonds over the next 5 to 10 years. I still think that the stock is not terribly expensive here.
The interesting thing, though, is unlike in years past where people wanted bigger and stronger and more horses and more power, people are downgrading. Now, you know, it's these $300 netbooks. Google has just come out with a $299 thing that is supposed to take on, you know, the Dells and the Hewlett-Packards of the world, and the Windows 7. There are a lot of strippers out there. Not the kind we usually talk about. I'm talking about the stripped-down version.
I see. Okay, I understand. I was
of the Windows 7
suddenly interested.
Program. So these are not. I mean, these are not going to be champagne and caviar dreams for these companies.
Well, I mean, you know, as prices come down, the market expands. It's like if car prices drop, then affordability improves and more people use cars and so forth, and the same for computers. But I have to say, like the computers I buy, it seems to me that every year they're more expensive.
Where are you shopping? Maybe you're shopping in the wrong place.
Yeah, that's possible.
Let me bring up Sam writes in from right here in Hong Kong, and he sends it from an iPhone, by the way. There's somebody that's tech savvy. Hi, Dr. Doom. Is it necessary to have global inflation, as you suggest, because of too much liquidity? Look at the Japanese experience of the past couple of decades of printing money, zero rates. Kind of suggests otherwise. Could the world be headed toward a Japan-style, I don't know what you call it, a deep freeze of the Toro tuna?
Yeah, but I have to explain something. Inflation does not necessarily have to mean that consumer prices go up.
Right, you made that distinction.
It can happen in other assets, and whereas it is true that in Japan itself, they didn't have a deflation that was pronounced. Maybe prices went down by 1 or 2% per annum. Some prices went down a lot, like golf course memberships and property prices and stock prices. That I concede. But other prices didn't go down a lot. But what happened is that the Japanese, by investing outside Japan, they boosted prices somewhere else. And nobody can tell me that here in Asia prices are lower than they were 15 years ago or 10 years ago. All prices are much higher.
Yeah, that's synthetic too. You know, it's governments taxing and capping and doing
Sure.
that sort of thing. But it does affect you, and you do feel it every time you you fuel up. Here's a question for Edward here. Edward, do write into the Asia Conf if you can, just so we can get it on screen. The Asia Conf handle. Is the dollar going down just groupthink based on a risk trade? Do you understand the nature of that question?
Yes, I mean, if you open a newspaper today or a magazine, everybody talks about dollar weakness, and so people wake up and they sell dollars, and then it leads to lower dollar exchange rates vis-à-vis other currencies. But I would say fundamentally there's not much to be very happy about the US dollar. You have zero interest rates, and you have a central bank governor, Mr. Bernanke, president essentially, chairman, who says we're going to print money. And if you open the papers and you read leading economists like Mr. Krugman, they actually argue for a depreciation of the dollar to bail out America and make it more competitive. Nobody in the world has ever become rich by devaluing the currency. But that's what they're advocating in America.
So economics hasn't changed then? The textbook hasn't been updated
in a couple
of generations?
No, it's been made worse. It's been made much worse.
Advancements in education